During last week's Finance and Responsible Governance Committee meeting at City Hall, two presentations were delivered. During the first presentation, Sarah MacGregor, the Director of Internal Audit, provided an overview of the city's internal audit department. The department operates with an annual budget of approximately $400,000 and has a specialized focus on improving operations and safeguarding the city's assets through fraud detection, investigation, and prevention. Additionally, the department oversees the city's whistleblower hotline, which has implemented in 2017, providing staff with the ability to report concerns anonymously for enhanced transparency and accountability. The Internal Audit Department completed 5 projects, including overseeing the city's fraud and wrongdoing program. The projects were compliance focused, ensuring that the city's activities were in alignment with internal policies, procedures, regulatory, and contractual requirements. Additionally, one project involved a follow-up review to assess the status of previous recommendations made by the department. The second presentation focused on the investment management report. Since 2018, municipalities were allowed by the provincial government to invest in equities in addition to bonds. To ensure oversight, municipalities were required to establish an investment board council. Geoff Waters, chair of City's investment board, shared that the previous year had been challenging due to inflation and higher interest rates. However, despite these difficulties, the total return on the city's investment was 1.59%. This outperformed the benchmark by an impressive 7.69%. The city received a total return of $6.2 million on its $339 million investment, with 46% allocated to fixed income, 34% to money market, 6% to equity, and 14% to cash. Follow the timestamps to jump to the relevant part of the video.
Good afternoon, everyone. I'll now call the Finance and Responsible Governance Committee meeting to order. Welcome to the Finance and Responsible Governance Committee. This meeting is being held in person and electronically in accordance with the Municipal Act. Today, we don't have any public meetings or open delegations. However, we do have two presentations. The first presentation is concerning an Internal Audit 101 and status updates. I'd now like to call upon Sarah MacGregor, our Director of Internal Audit, to provide the presentation.
Thank you, Chairman Harvey. Hello, members of committee and council. I'm Sarah MacGregor, as introduced, the city's Director of Internal Audit. Thank you for the opportunity to share some information about our department today. I'd like to start by just asking with a show of hands, how many of you have worked with an internal auditor before? Okay, good, okay, pretty good showing. And to date, it's been a good experience? Good experience, okay. Bad experiences, anyone? If you're honest. And if you haven't, maybe it's something that's always been on your bucket list, but you just haven't gotten around to it. And today's your lucky day, first audit interaction. Okay. Well, I suspect often when you hear the term audit, this is the instinctive reaction is generally negative. And we're obviously working to change that. First picture is an accurate depiction of city staff reactions when we tell them you're about to be audited or you're going to be audited. Fun fact, when you search the term auditor in Adobe stock images, this picture of like a rock concert with a rock star actually shows up as one of the first images, which completely surprised me. I'd like to think people want to cheer on auditors for the great work that we do in organizations, but I'm not sure that actually happens in this kind of a forum. But we aim to have staff and council, excited to meet with internal audit. We've definitely had some success to date, but we're always working on that. So for our first meeting with this term of council, audit's first meeting, I brought the whole department to meet with you today. I don't know if any of the other departments can say that. So you've got all of the city's internal audit here with you. I'd like to introduce Jessica Lump, who works with me, my colleague. And together with an annual budget of about $400,000, we are a lean and efficient department of two. And welcome and happy to be here today with you. We bring strong academic backgrounds, professional designations, and work experience to the city of Barrie. Since joining the city in late 2016, I've been excited to help build the city's first internal audit department. Prior to working at the City of Barrie, I was a partner in a global accounting and consulting firm where I specialized in forensics, namely fraud detection, investigation, and prevention. Internal auditors are always trying to make things better. When we find efficiencies, we see opportunities for improvement. If we find fraud, we're constantly looking for ways that we can change things to help prevent it in the future. Consider us chronic optimists. We're going to try to make all these situations better. Simply put, internal audit's objective is to improve operations and protect the city's assets. Where possible, let's find ways to do things better. And let's make sure that what we do have is properly safeguarded. This aligns very well with Council's objective of responsible and goal of responsible governance. Let's start with what internal audit is not. We'll start clarifying with this. Internal audit isn't about going on a witch hunt and looking to point fingers and place blame. Objectively, we report the facts that we find and the outcomes of that. We can't always predict what those are going to be. People might not always be happy to see what that is, but that's what our objective is. We aren't the police. We're not nitpicking at tiny little details. We're not just going through standard checklists and doing the same testing year after year. We're also different from external audit. Now, for the city, our external auditors are Deloitte. And I think Deloitte met with you at your last meeting. And Deloitte provides an opinion on whether the city's financial statements are fairly represented. That's not what we do. And we're also different from tax auditors, like at Canada Revenue Agency, that deal with personal and corporate tax issues. What an internal audit is we are independent and objective. Functionally, internal audit reports to this committee, specifically to the chair. From an administrative perspective, internal audit on a day-to-day basis reports to the chief administrative officer. We are intentionally not part of a specific division or executive portfolio at the city to maintain independence from all of the operations and the different business units. We're focused on adding value, finding efficiencies, enhancing internal controls, looking to improve the checks and balances at the city, while also looking to help the city manage risks and assess compliance with a lot of internal controls or contractual requirements. We also oversee the city's whistleblower hotline. So audit provides a fresh set of eyes for activities across the city to help maximize tax dollars and results. So there you have it. In less than 5 minutes, that's your internal audit 101. Maybe I've set a record, maybe I haven't. Now I'd like to take some time to dig into the results of our work when I share our most recent internal audit update. In the balance of 2022, we completed 5 projects and also oversaw the city's fraud and wrongdoing program and any investigations that were required with that. 4 of the projects were compliance focused to ensure the city's activities were aligned with internal policies and procedures, regulatory or contractual requirements. And 1 project was a follow-up review, which checks the status of recommendations we have made previously. So we continue to learn how to balance our available resources with the existing priorities to ensure that we can deliver the best value to council and to city departments. The first projects I'll discuss are billable rates audits, which were performed for 2 integrated project delivery construction projects at the City of Barrie. An integrated project delivery approach brings all the stakeholders together early in the process to combine the talents and insights of all participants to optimize project results and maximize efficiency. The Operations Center Redevelopment Project and the Allendale Mobility Transit Hub are 2 projects where the city's right to audit was exercised with the project partners and with vendors to ensure that rates that were billed to the project were both supported and calculated in accordance with the contractual requirements. Billable rates are typically set out in the contract terms and applied to any hours worked by team members on the project. Between these 2 projects, 12 vendors and actually 66 team members, that was maybe a little Easter egg I put into the PowerPoint for you guys to check if you were going back and forth between the report and the PowerPoint. 66 team members were audited to assess whether the rates charged include both allowable costs and that they were calculated in accordance with the terms of the contract. So through these audits, the city demonstrated its commitment to hold project participants accountable to contract terms and ensured that the rates that were billed for the team members were both supported and accurate. Moving from construction projects to finance, our next project was an accounts payable follow-up review. A follow-up review looks at the status of recommendations that we made in a previous audit. And in our accounts payable audit, which was completed in 2018, we made recommendations to strengthen controls and improve efficiency of processes. Follow-up reviews provide accountability for the departments to demonstrate that they've addressed the items that were identified for remediation and ensure that recommendations aren't shelved or forgotten. This slide summarizes the status of recommendations that were made in the prior audit. At the time of the initial audit management had the opportunity to respond to the recommendations, and at the completion of the audit, management accepted all of internal audit's recommendations. So we were happy to see that staff have successfully addressed 8 of the 14 recommendations from our initial audit. 5 recommendations are in progress, various stages of progress, and 1 recommendation has not yet been started. We will continue to monitor the completion of all the recommendations and report to committee once they've been achieved. The next project is an audit required by the Ministry of Transportation for the city's right to participate in the ministry's driver certification program. So prior to the creation of the city's own internal audit department, this is work that we previously would have outsourced to a third party. And now that we have an in-house internal audit department, we're able to save that cost and perform efficiently with qualified resources that we have in-house right here at the city. So the driver certification program allows participating organizations to conduct their own driver training and testing on behalf of the ministry. And that eliminates travel and wait times for staff to attend the drive test center to complete the renewal. And that ultimately saves the city time and money. So our audit results were submitted to the ministry in November and noted 2 infractions, which the city will work to address, and audit will reassess them again during the next phase of the DCP audit, which is anticipated to take place in 2023. Purchasing cards, or P cards, are credit cards that provide staff with a convenient and efficient way of making low-value purchases of goods and services. So the city also reimburses eligible expenses paid by employees personally that are incurred for business purposes. We conduct audits of both P cards and expense reports annually to monitor and ensure compliance with city policies and procedures. Overall, we found the city provides effective purchasing methods for staff to meet low-value procurement needs with both of these methods. Based on the audit performed, compliance with the policies and procedures has improved from prior years, which was great to see, but full compliance was not yet achieved. We made recommendations to assist with the monitoring of achieving compliance for both the usage of P cards and expense reimbursement. And several examples of the recommendations that were made were to provide supplementary training to reinforce requirements for sufficient supporting documentation and approval for purchases. A continuing challenge for staff has been understanding what meets the requirements for adequate supporting documentation. For example, a credit card slip isn't sufficient. A detailed transaction invoice is required so that the approver can see the detail and nature of the goods and services that's purchased. And another recommendation was to improve the monitoring and approval of transactions to ensure transaction splitting does not occur. So transaction splitting is when a single purchase might be split into multiple payments of smaller dollar values, which allows staff to remain within their authorized limits. So existing approval limits need to also be assessed on a regular basis to ensure that they're adequate to meet staff needs. The last audit responsibility to discuss today is the fraud and wrongdoing program. Now that's the city's term for our whistleblower hotline program at the city of Barrie. And it formalizes how city staff can report any concerns of fraud or wrongdoing that they have without fear of retaliation. So in addition to the ability to report concerns directly to their supervisors or to other city staff, staff also have the ability to report while staying anonymous through by phone, through a website, or through a confidential PO box, all of which are operated by an independent third party called Clearview Connects. I like this slide because it shows different methods of reporting available to the city staff if they have concerns. In my experience investigating fraud, it's common for staff that work close to a fraudster to have seen red signs or warning flags. Fraud surveys tell us year after year that the most common method of discovering fraud is by tips. Our staff are the best way to provide those tips to us. So it's important that we make sure staff know how to report if they have any kind of concern, and that they're not afraid to report, and that they're comfortable reporting, that they won't suffer any kind of negative repercussions or retaliation for doing so. In 2022, you can see that the most common method of reporting was directly to staff. So in some cases, that means a person's supervisor. In some cases, it means directly to me, in internal audit, or to our audit department. And since 2017, when our program was first implemented, the percentage of reports coming directly to staff has increased. And having multiple options for reporting is consistent with best practices for whistleblower programs. But it's encouraging to see the continued use here at the City of Barrie, use of the program and acceptance from staff. So we're eager to change stereotypes about audit and continue to develop productive interactions with both staff and council. Bottom line, we're here to support the committee and council and provide comfort that the city's businesses are operating effectively and that the city's assets are safe. But is audit at rock star status yet? No, certainly we're not. But what a day it would be if we were ever celebrated by the city with fanfare like this. Audit has big dreams, and we look forward to sharing the results of our work with you. Thank you.
Yeah, thank you for your presentation. I guess for you to get that rock star status, unfortunately, we'd probably need something bad to occur, though. So I'm not looking for that to happen, unfortunately. And I know the CAO is shaking his head, big no there too. We'll move this agenda item 7.1 up. Also, the report to committee concerning the 2022 year-to-date internal audit status report, 2022 fraud and wrongdoing activity program, 2022 summary of internal audit activity, and 2023 internal audit work plan, in order for members of committee and council in attendance to ask questions about the presentation and the report together. Is there any questions from any members of committee? Deputy Mayor Thompson.
Thank you, Chair Harvey. Really quick, it's nice to see that we actually perform our own licensing. I was wondering, does that include commercial licenses as well?
Not to my knowledge, but I could certainly follow up on that with our Director of Operations for that. I know that there are specific classes that we were performing the the DCP audit testing around, and I don't think it was the commercial licensing.
Okay, yeah, just because it said of city vehicles, so we do have some larger vehicles, so I didn't know if we were able to do that for everybody. Secondly, in the wrongful and fraud, you said, like, it was really nice to see the amount that's reported right to their director, which is really nice. It shows that, you know, people care and their management is approachable. I was trying to find in the report, out of the, I think it was 11. Sorry. The 11. How many was there that you found were not just suspicion and they were actually something that had to be rectified?
Through you, Chair Harvey, to Deputy Mayor Thompson, paragraph 70 in the report just has a table summarizing which were substantiated and which were unsubstantiated, the reports. So of the 11 reports received in 2022, 8 were substantiated. Now, substantiated doesn't mean 8 cases of fraud. You know, I mean, there are various things that could be reported through these.
Yeah, correction of paperwork and more detail on a receipt or something to.
It could be that processes need to improve, for example, and there are improvements we can make to specific internal controls. There's you know, different things that could be involved. It's not that the chart above that at paragraph 69, you can see the delineation of the types of reports that were received. You can see that there were 3 fraud-related concerns received in 2022. So the rest are, you know, there are a number around conflicts of interest or unethical conduct, things like that. So again, there are actions that the city will take in response to receiving those things and correcting those matters. But I just wanted to clarify that they don't all translate to being fraud.
Well, for an organization the size of us, 11 is very low, which is a good sign. And you know, auditors don't always get rock star, but the efficiency of your presentation and the time you did it in, I think you're a rock star.
Thank you.
And I thought you liked those 20-minute to 30-minute presentations, Deputy Mayor. Councillor Kungle.
Thank you, through you, Chair Harvey. Thank you, Ms. MacGregor. And it's always lovely when an auditor comes forward identifying as a chronic optimist. So thank you for the work that you're doing. Could you speak a little bit more to how does the report that you're doing internally around your audit, is that an input into the overall audit for the corporation that Deloitte kind of takes a hand in? So I'm assuming the work that you're doing around the checks and balances all contribute to the positive overall audits that Deloitte comes forward with. So is this an input into what they actually look at from an auditing file?
Through you, Chair Harvey, to Councillor Kungle, that's a very accurate characterization of it. Certainly what one component or one factor that Deloitte, as our external auditor, expressing an opinion on the financial statements as a whole, they will look at the state of internal controls and what our control environment is like and what kind of conduct, if there have been instances of fraud, what might have contributed to that. So the specific projects that internal audit will work on in a year don't, form and translate into what goes into our city financial statements, but controls that are tested and found to be working effectively, that gives Deloitte some reassurance or some help in terms of building their own risk assessment of the city and their own factors that are required for their own testing. So each year, for example, they'll have a fraud questionnaire that they'll seek input from members of the executive management team and internal audit. Usually is that same input is solicited so that if there's something that I'm aware of, I can bring that forward to our external auditors as well. So yes, kind of working together, the outputs, some of the outputs of what we do, it will help them in their own assessments of risk for the city, but the specifics of the projects don't translate into the audited financial statements that they prepare.
Great, thank you. And then second and last question, when you went through the slide and it's detailed a little bit, I think on page 13, if I've gone back, around in 2022, those 11 reports around fraud and wrongdoing. I might be reading it wrong, but I wanted to focus more on the number of recommendations and when you identified that there were 5 either in progress and one not started around recommendations, I guess, that came out. Is that correct? So in your slide, 5 in progress and one not started. And in reference to coming back to this committee with the overall status without getting into the operational detail, do those all have a timeline to conclude or be resolved or implemented as a recommendation within this year, or do some of those cascade across years?
Through you, Chair Harvey, to Councillor Kungle, it depends. That sometimes, yes, sometimes there'll be timelines where obviously we want to get any of the recommendations implemented as soon as possible. But often there can be some logistical challenges in doing that. Sometimes they are intertwined with implementations of new systems or softwares or different things that haven't yet been purchased or in progress for that. So that can sometimes cause delay. Challenges and things like COVID pandemic and reprioritization of things certainly has had an impact in some situations for some of these kinds of recommendations as well and implementation. But generally, yes, there are timelines. We're looking to achieve them as soon as possible. We continue to track them, and certainly we'll continue to report to committee on a regular basis about that.
Thank you.
Great, thank you. Any other questions from members of committee? Any questions from members of non-committee? Councillor Nixon.
Thank you, Chair Harvey. Just a quick comment and then a question. I'm glad to see that the image of internal audit is a little more friendly and a little less confrontational than it's been known to be over the years. I remember going back a long time ago. I worked for a large company, and we had an internal audit department that would travel North America and just kind of show up at your door, and I would say, "Hey, it's great to see you," and they would say, "Hey, we're here to help," and we were both lying, you know. But I just curious, do we share not necessarily, you know, names and whatnot, but instances or some sort of KPIs with other municipalities to see how we measure up? And obviously the population and the number of employees makes a huge difference. But is there any communication between other municipalities to see? I mean, obviously our numbers look very good. I'm just curious how they compare to other cities.
Through you, Chair Harvey, to Councillor Nixon. There's actually an incredible network of municipal internal auditors across the province. One thing that I was very unaccustomed to coming from private sector 6 years ago, I'm unaccustomed to all of the knowledge sharing and cohesive collaborative information that goes back and forth between different municipalities. So I'm able to network and correspond with basically my counterparts in most of the Ontario municipalities. We have workshops and conferences twice a year where we meet and connect on different issues. And also, again, those are networking and information sharing opportunities. I think one time I jokingly said, I said to someone, "Oh, I'm off to a conference. I'm going to a Municipal Internal Auditors Association conference. It's going to be really fun." And I wasn't being sarcastic. I'm like, it's going to be really great. It's a great group of people. And the person I was speaking to looked at me as though I had two heads. Like, how could Municipal Internal Audit fun? How could that possibly be a whole room full of you guys? But yeah, no, there's now specifics about, you know, how many hotline reports do you have? What have you accomplished? Frankly, everything in public sector is posted publicly on websites. So that's all. It's part of this openness and transparency amongst all the municipalities. People are happy to help and share and collaborate because of our results are all available to the public. So there is a lot of information sharing that way. And then in addition to that, certainly we have a lot of connections and sort of sub networks that we're able to share if there are particular topics, or how have you handled this particular issue before? Or have you seen something like this in your municipality? We're able to find that connection as well.
Great, thank you.
Thank you. Any other questions from anybody? No. Thank you for your presentation. And I know we've had some good discussion a few weeks ago, fairly in depth about what was ongoing and what you planned on doing in the near future too. So as always, we appreciate the work that you're doing and trying to streamline things and obviously ensure that we don't have any issues here at the City of Barrie. I would now ask a member to put 7.1 on the floor. It's the 2022 year-to-date internal audit status report, 2022 fraud and wrongdoing program activity, 2022 summary of internal audit activity, and 2023 internal audit work plan. Thank you, Deputy Mayor Thompson. Is there any further questions or dialogue around this item? No? I'll then call the vote. All those in favor? And I'm in favor also. It passes. The second presentation is concerning the 2022 investment management report. I'd now like to call upon Craig Miller, Chief Financial Officer, and Geoff Waters, Chair of the Investment Board, to provide the presentation.
Thank you, Chairman Harvey, and welcome members and non-members of Finance and Responsible Governance Committee. It's good to see so many of you attending tonight. So my role here is really short. I'm just going to give a little introduction as well as a little brief history on the investment board and the prudent investment standard. So we have an investment board. We have a prudent investment. We have an investment board because the city adopted the prudent investment standard. We are one of only a few municipalities that went down this road. And really, the province, I think it was around 2018, they created the opportunity for municipalities to expand their ability to invest. So previously, you could only really invest in bonds and things of that nature. But it was the realization to maximize your return and mitigate risk. You really need to expand what you can invest in. So they allowed municipalities to invest in equities. But in exchange for that, they smartly put in place the prudent investment standard, which is basically requires municipality investing money under the standard to exercise the care, skill, diligence, and judgment that a prudent investor would exercise in making such an investment. So the framework requires municipalities to establish an investment board. Council sets goals and objectives through the investment policy and appoints an investment board to control and manage those investments. We at the city were very fortunate. Back in around 2016, we had our current investment portfolio manager, Thierry Reyes, who's standing here behind me. Thierry came on board and has done an incredible job, not only on the investment side, but also on the debt side. So when Thierry came on, I explained to him that out front here was the Bay Street of the North, and we walked down and introduced him to all the banks, and he got excited and he stayed with us. But he saved the city a lot of, like, in the range of millions of dollars in the debt that we issued. He took us to the equity, basically underwriting, taking us to the capital markets where we were selling City of Barrie debt. He's also a key team member when we go through the annual credit rating exercise with Standard & Poor's. Thierry works very closely with Standard & Poor's. The investment board is one of the challenges we thought we were going to have when we went down this road was what were we going to be able to attract the skills needed to join the board. And we were blown away by the skill set that came forward. So the members include Paul Belanger, Gordon Winter, Mark Valet, and our chair, Geoffrey Waters, who's going to do the presentation. Geoffrey's behind me. Geoffrey has over 35 years of experience in the investment industry, managing funds for large institutional clients, including corporate pension funds, endowments, insurance companies, charities, and Indigenous groups. He retired from OMERS in 2016 after 5 years as their principal risk management. Prior to that, Geoff had several positions, including Vice President, Portfolio Manager at BMO Asset Management, Principal and Vice President at TD Asset Management. Geoff holds an MBA and is a Chartered Financial Analyst. So we are in good hands, and the other board members have similar experiences. So with that, I will pass it over to Geoff. Great. So I don't know how to use that. Yep.
Chairman Harvey, Mayor Nuttall, Deputy Mayor Thompson, councillors. It's my pleasure to be here to present the investment report today. I'm going to go through 3 separate areas. Be a review of what happened in 2022, which is something I think I might want to forget as an investment manager. It was a lot of trouble. The performance and how Barrie did managing the funds. And then briefly touch on a market outlook, just to give you some idea of where the committee is thinking. It's not set in stone, there's no guarantees, but certainly we give you our opinion of what we think is going to go on. So 2022 was one of those years where you might want to just forget about it if you're an investment manager. But what happened last year has its roots back in 2008. And that's when we had the financial crisis and the whole financial system started to just freeze up. And the worry was that there was going to be a collapse in the whole worldwide financial system. So what happened was that the central banks decided they were going to do 2 things. Interest rates came crashing down and they flooded the system with money. They're actually buying up bonds and various pieces of paper and putting money and liquidity out there so the system could keep working. So those interest rates remained in place over the next 10 years. And then some central banks started to tighten a little bit, but there were a few things that happened that got them scared, so they backed off again. So they took them back down where they were, around 2% or so. And then the pandemic hit and rates essentially in the US went to 0 and very low in Canada. Things shut down. I mean, you couldn't go shopping for anything except gas, groceries, and liquor. That was about it. You couldn't buy clothes, you couldn't buy anything, but it also shut down businesses, production, and everything else. Now, when the pandemic restrictions started coming off, there was all this pent up demand. And what happened is that all these supply chains and all these manufacturing facilities and production facilities weren't working. So there wasn't much supply. And that started a round of inflation. Now, initially, the banks, central banks thought it was going to be, well, this is just transitional. But when it started getting really serious, we're up at 3, 4, 5, 6%. That's when they really put on the brakes and started raising interest rates. So they executed, the Bank of Canada and the Federal Reserve executed one of the largest interest rate hikes in history. And as a result, equity prices and bond prices went down. But commodities went way up. So I'd like to turn to the next page. Just let me get my, oops. Okay, I need help going back. There we are. So we had a lot of losses across various asset classes. You can see in the rust color here where money was lost and where money was made. And not surprisingly, natural gas, well, my gas bill's up terribly. I got to tell you that, 20% there. Next was agricultural products. They jumped too. That's wheat, corn, things like that. Next was crude oil. And following that, we just had the lowly Canada T-bills, which returned about 2%. And you can look at the other side, the extreme losses. Bitcoin, which is one of those things that I've been in the investment business for 40 years. I don't understand it. So I don't, my advice is don't touch it. But we had a couple of other things happen. The NASDAQ index is second from the bottom. That's technology heavy. Those are growth stocks. And they had a real problem last year, if you recall, all the big tech stocks all plummeted last year. But also we had the world index down, stock index down, and the S&P by over 19%. Aggregate global bonds were down 16. Canadian bonds were down 11. Interestingly enough, the TSX relative to the other losses was pretty good. And that's because there's a big component in there of commodities. We produce natural gas, we produce oil, fertilizer, and minerals. And that's a big part of that index. So just to show you the extent to which Terry was dealing with here, what this graph represents here is the returns, one-year returns for bonds and stocks. Now it's US data, but it allows us to go back 150 years. And along the vertical axis is the 10-year treasury return. And along the horizontal axis is the corresponding year equity return. And you can see that 2022 is a real outlier. In fact, we've only had negative returns of both bonds and stocks 3 times, 41, 69, and 87. I remember 87 personally because I was 6 years into the investment business. I'm going, oh my gosh, what's happening out there? So anyway, because they raised rates so much, that's essentially what happened. So how do we do in all this storm? Well, your total return of the portfolio last year was 1.59%. And you go, well, that's not very much. But if you look at how we measure our investment manager, we have a portfolio index that we follow to say, how is he doing? He outperformed it by almost 7.7%. So something right was going on there. It was a very tough year to be in any type of asset class. That was a total return of 6.2 million on average assets of 389 million. The assets essentially doubled over the course of 2022, which put even more pressure on the investment team as well. So now one of the things we do is we look at how did he do it? Like, how did he get those numbers? And we've got all these 4 things here. He shortened the portfolio duration. I want you to think of duration as the same as the maturity of a bond. So it's a lot simpler than trying to do the mathematics of that. But just to give you an approximate, the longer the maturity of the bond, the more sensitive it is to interest rates. And by shortening up maturity, you take less of a hit. You still get it, but you don't take it quite as bad. The second one was tactical asset allocation. And that's sort of positioning the portfolio where you think there's good opportunities. Dollar cost averaging, which we've used in the equity side of things, and something called a currency tailwind, which was the strength of the US dollar compared to the Canadian dollar, and we're invested in US equities. actually got a boost from the currency. Well, if our currency drops, US goes up. If you're a portfolio manager, you love it if you own US stocks. If you're going to Florida, you might not love it so much. So it costs you a little bit more. Okay, just to give you a brief idea of where your assets are. We've done it by asset class. So you can see that we have cash and money market on the left side of the left pie chart there, fixed income in the gray, and equity. So that's kind of the current makeup of the portfolio by fund. And I just want to clarify things. We don't have three separate funds. We have one fund under an umbrella, but we kind of divide it into different pots because each one has a different purpose. For example, your operating fund is something from now until maybe a year or a year and a half from now. So it's something that's almost immediate that we're going to be spending money on. The capital fund is for longer term, so slightly longer term, midterm. So 1 to 5 years, projects you know are coming, but they're not in progress yet, but you got to have the money available for when they do start. And then the growth fund, that's kind of what we're looking at in the future, saying, let's hope we can get some of our capital to grow so we have more money to go forward. So that's the breakdown of the assets. Total assets as of the end of the year were $408.6 million. Now I mentioned, how did we do that? Or how did theory do that? Okay, so short duration strategies. And as you remember, I said they shorten the maturity of the portfolio. So one of the things that I want to emphasize here is that normally interest rates go from being short-term, long-term, and you expect to get more return for being out, for being out further on the curve. And it makes sense. You're taking more risk giving your money to someone for 10 years rather than doing it for 3 months or 2 years or whatever. So what that is called is a yield curve, and it goes from 3-month T-bills all the way to 30-year bonds. And it's usually a normally upward sloping curve. Now, what you see in that rust color part, that's a normal curve. That's a 10-year bond versus a 3-month T-bill. And normally you get a big spread over that for taking the extra risk. But that blue line that you're seeing along the top chart there shows how the Bank of Canada was increasing interest rates over time. And it was quite sudden. And the real shock came in July when they raised rates by a full percentage point, totally unexpected. And that's when the curve started to invert. And you see that in the green there. And that's where short rates were paying better than long rates were. Now, typically, when you see an inversion like that, there's an economic slowdown coming, which there's a lot of worry about that right now. In fact, I think it's got the Bank of Canada worried. It has the Federal Reserve worried because they had a bank fail this past month, and it was largely because of the inversion of the curve that they got caught. So, but we expect the banks, central banks, to kind of slow down a little bit, pause, take a look at it. They may raise again, they may not. But the bottom chart here just shows you the degree of spread that you have. So the far bottom chart, far right, we got up to 1.46% T-bill yields over 10-year bond yields. And in early January, it went to 1.7%. So it really got extreme. It's since started coming back down somewhat, but it still has quite a ways to go before we get rid of that inversion. Now, tactical asset allocation. Larry and his team looked at GICs and they went, well, there's something really interesting going on here, because if you see that line at the top end, top right, it says 6%. That's a 1-year GIC. It's paying better than anything else you can see there at the end of the year. So one thing that they did was they started allocating assets to the GICs, but they didn't just buy one lump. What they did was they bought them in sort of what we call a ladder. So it's 1 year, and then next month we'll buy another 1 year. And so you've got money coming out so that when it does mature, you might want to go back to a GIC, you might want to go to a bond, you might want to go to equities. It just gives you opportunity, but it locks in 6%. I kind of like that number. It's very good, especially when you see what happened in the last part of the year. So Anyway, that's what they've put together. The blended rate for at the end of 2022 was 4.9% on this part of the portfolio. And the average term on that is about 1.6 years. So we have quite an effective ladder going on there. Now, another aspect of tactical asset allocation is in the sectors of the stock market. Now, here we've divided the market into the various buckets that it holds. You can see consumer discretionary on the far left, real estate on the far right. And what we did with the portfolio, or what Theory did, was put the portfolio in a defensive position. So he still has a lot of room to add, but he was trying to make sure that took the areas that weren't really going to have too much of an issue with what was going on. They pay dividends. They're not very volatile. And so the defensive areas where they were overweighted were consumer staples. Even in a pandemic, everybody has to buy food. Energy, we have to run our cars and heat our homes. And the utilities, you're not going to turn your electricity off. Doesn't matter what's going on, recession or not. But the ones that really underperformed, and I mentioned earlier about the NASDAQ, was the technology sector. And the reason they underperformed was because they're considered what they call growth stocks. And they don't usually pay dividends, but they do need money because they're growing companies. And if the cost of borrowing is going up, all of a sudden you're going, okay, wait a minute, that's going to affect my bottom line. So that starts affecting their profits. Also, these companies rely on investors saying, well, I know it's not paying dividends. I know it's worth this much now, but in 10 years, it's going to be worth this much. And when you raise interest rates, this much out there isn't quite worth as much as it is today. So that's the problem. So anyway, the portfolio is defensively positioned. As the team starts to feel a little more confident, it will move into more growth areas to try and take advantage of that. Okay, item 3 in that first chart revolves dollar cost averaging. I mentioned that was one of the things that they did. The equity portfolio is putting money in, not all in one lump sum, but as little bits. And we do have an equity target of 20% of the portfolio. But the strategy of dollar cost averaging is to buy on market declines. And you can see where some of these dots are placed. That's exactly what was going on. And the size of those yellow bubbles represents just the magnitude of how much they were buying at a time. Now, we put a policy, not really a policy, but just agreed at the investment board and with the investment manager that we would try and put in $1.5 to $2.5 million per month just to get us into the market, trying to take advantage of these drops. And it all depends on what the current level of the markets are and the outlook that the investment manager has, but it gives them a lot of flexibility. And that's exactly what the manager needs. He can speed it up or slow it down depending on the market conditions and how he feels about the market. So at the end of 2022, we had $25 million in equities, or about 6% of the year-end assets. And that's below our expectations that we were targeting for that year. But then the whole portfolio doubled in size. So it kind of shrank what we were expecting to happen. I mentioned the last performance attribution, item 4, strong US dollar. It's a tailwind for Canadian investors, as I mentioned. The US dollar is considered what is known as a counter-cyclical currency. And what that means is when times are tough, the outlook isn't very good, it tends to be where investors want to go because it's the reserve currency of the world. It's safe. They don't have to worry about not being paid. Now, the stronger dollar led to about an 8% bump in our US portfolio returns. So you had the stock market return or non-return, and then you have the 8% bump from the currency. Now, that's not really a key thing that we want to try and guess. I mean, currency is currency. We don't hedge for it or anything like that. But it is nice to get one of those windfalls, but don't expect this to happen every year. Well, Canadian dollar would keep going down and down and down. So we're expecting sort of going into the next year that we'll probably see a little unwinding of that as the Canadian dollar regains some strength. So where are we going to go? Well, we've had that rate increase, as you can see, the largest and swiftest in recent history. We have asset prices of bonds and equities falling, commodities gaining. We have a risk of a recession coming potentially, or an economic slowdown. Global conflict is always sitting on the horizon. You never know about that. And of course, we have these climate things happening that are impacting a lot of the commodities that we produce agriculturally. But there are opportunities there. We believe that the increased demand for commodities will work well for Canada, given the outlook in terms of where our industries are in the stock market and the sectors that they're in. And right now, even though the bond market wasn't the greatest place to be last year, the yields are certainly a lot better than they were before. I mean, we're looking at 4% yields, 4+% yields. It's not beating inflation yet, but as they do come down, the price of those bonds will increase. Bonds are sort of like a teeter-totter. As interest rates go up, the prices drop. And as interest rates go down, the prices go up. So it's kind of one of those things. Took me a while to get that when I was earning my CFA. Anyway, the one thing that we think is encouraging is that as rates do come down, there is a potential for equities to make a nice recovery here. And we also think that, as I mentioned earlier, most of the increase in central bank rates is probably over. As I said earlier, the Silicon Valley Bank in the US, I think, really scared the Federal Reserve a little bit. And that was caused by the yield curve inversion, because those guys were buying long-term bonds at 1 and 1.25%. And all of a sudden, when interest rates went up, those bonds dropped. People got word of it and said, hey, I want my money out. And then you have a bank run going on, which is not the greatest thing to happen. So year to date, portfolio is up about 1.5%. I don't have a breakdown of the different components of it, but if you just look at an aggregate bond index in Canada, it's up 3.3%. Canadian equities aren't doing all that great. They're only up 0.4%. And the US equities are up about 4%. So it's a good start to the year, but it's only March. So I don't know when or where the figure will come, but we are positioned. We have a lot of cash. We have a long way to go in our program, and we're certainly looking for opportunities to get that money to work. And that's a report. Thank you, Mr. Chairman.
Great, thank you for your presentation. And yes, I guess the days of 12 and 15% returns are probably not anywhere near our future.
Not soon.
Yeah. So again, we'll also move up agenda item 6.1, the investment board report dated February 28th, 2023, and the recommendation concerning the 2022 investment management report, in order for members of committee and council in attendance to ask questions about the presentation and the board report and recommendations together. Are there any questions from members of committee? Mayor Nuttall.
Thank you, and thank you for the opportunity yesterday to go over some of this data in advance, and certainly learn a little bit more about our investment board. First of all, I just wanted to say that, you know, when we're looking at these types of reports, more than anything else, usually we're really looking at what's happening in the last year. The audit, for instance, what's happened over the last year. The scope of what the investment board does is much longer than that. And so, you know, a lot of the things in terms of the equities, we should be looking at it over a period of time that's kind of 10 years and longer. I want to first of all say that one of the first things I asked for after being elected was not to embarrass you, sir, but the resumes for each individual on our investment board. And I went through them, and I was incredibly happy with it. We have some very good people who have agreed to work with the city of Barrie, and this is one of two investment boards that exist in the province, the other being the city of Toronto. And I believe that we might have a third one based on the conversation yesterday that's coming along. But that's how far ahead we are, and other municipalities will catch up. So I think it's a testament both to the individuals who are on the board, but also to our public servants who proposed this, brought it into being, because it wasn't that long ago, maybe 9 years ago, we were receiving about 0.25% return a year, and it was actually we were losing money on the relationships that we had in terms of our reserve accounts. So I think this is a really good news story. Thank you for the presentation. Obviously, year after year, it'll keep going forward. And I'm not sure if Thierry's still there. You are. Sorry, sir. Thierry, I used to have a favorite fella named Thierry. It was Thierry Henry, who was my favorite striker in the world, and you've taken over. So thank you. Thank you for the work that you're doing on behalf of the city.
Thank you.
Thank you, Mayor Nuttall. Any other members of committee with any questions? Any non-members of committee? Thank you. Go ahead, Councillor Corser.
I'm probably asking something that's completely out of scope, but I'm wondering, with climate change, with the geopolitical issues, with all the things that are on tap right now, have you experienced, or like usually when something, it's almost like a predictable thing where you can, if there's climate change, you could put money into a certain sector. Have you seen this kind of volatility in the market in your career? Like, is this something such an outlier in the last like 3 or 4 years to you?
Through Chairman Harvey to Councillor Corser. No, I haven't seen sort of any provisions taken to any great degree, if anything. By the way, there's a real controversy right now going on with ESG investments, environmental, social, and governance. What do they mean? Everybody's got a different standard. The one thing I will say about climate change in particular, or geopolitical, is they're completely unpredictable. Like, you cannot insulate yourself, say, oh, I should be doing this because I think there's going to be this happening somewhere in the world. The best you can do is deal with it as you're going along and make sure that your risk level and your diversification are such that you've got a portfolio that can kind of weather the storm. And as I mentioned earlier, that did not happen in 2022. There wasn't a lot to weather the storm with, other than what Thierry did was his portfolio and just some of the tactical moves and other investment moves that he did make. So, but not to my knowledge, no.
One other question. I'm by no means, I wish I knew what I was talking about. Our portfolio, with the unpredictability of the world right now, is it in a position to pivot quickly if necessary?
Through Chairman Harvey to the councillor. Yes, we have a lot of liquidity. Ultimately, the sort of target for having the operating fund take it down towards 15%. We're at 50% right now. We have a tremendous amount of opportunity here. And I mean, I know Thierry and his team are just waiting to strike if something looks really, really good. So, but the name of the game is don't sort of do like one big bet, spread it out, make sure that you're monitoring the markets, put more in if you feel better about it, put less in if you don't. The direct answer to your question is yes, we're well positioned for that. And the board is very happy with that, by the way.
Okay, wonderful. Thank you very much.
Thank you.
Any other questions from anybody around the table? Thank you again for your presentation, sir. It greatly appreciated the work that you do. And as a member of OMERS myself, thank you for your time at OMERS, because I'm sure OMERS was a lot more of a job to try and juggle that with obviously the ratio of retirees to active paying members into that one. So again, thank you for your very detailed presentation and the work that you do for the city of Barrie.
Thank you, Chairman. And just to let you know, it was a real learning experience.
That was the update from Finance and Responsible Governance Committee meeting. Thank you for watching.